Hey everyone, welcome back to the channel. Today we've got some great news. The S&P 500 is down 10% officially. Technically, that's what we call a correction. What this means is right from the beginning of last year, the S&P has dropped by at least 10% from its high. And I'm going to walk you down to show what this means in terms of the technical analysis and also a bit of fundamental analysis. And also kind of like share with you most of the stocks that have been really driving this sell-off and also some strategies that I'm using to mitigate or to protect my portfolio from this drawdown. Now, those who don't know, the S&P 500 is basically you are looking at the top 500 uh, publicly listed companies in the US, and these are the Apples, Microsoft, Tesla, that come from different sectors in the US. And what happens is that at any given year, the committee that selects those 500 companies then decides to say, okay, these are the ones that are not profitable, maybe let's say the bottom three or whatever the criteria they use, and then they pick other stocks that may not be in the S&P 500 index, and then they add them into this basket, right? Let's say, those that were performing and those that meet the criteria. Now, why is this significant? Usually, a lot of people, when they are looking at their performance globally, they are comparing it with the S&P 500. On average, it has retained about 10% every year. Now, I'm going to walk you through my technical analysis and then my thought process with regards to. So for those who don't know, this is TradingView. It's usually the software that I use in terms of doing my analysis. So this chart that you see here, you are looking at the S&P 500 ETF that is called SPY. But let me see if I can just use the S&P 500, the index. For me, when I'm trading or investing, I can buy shares of S&P 500. That is how I get exposed to the S&P 500, and there are quite a number of them. But what you can see on the screen here is that you can see that a lot of these stocks, mostly the tech stocks that I follow, they are taking a hit, and these are the ones that constitute the S&P 500. Hence, it has been dropping. So you see here, right? Tesla is down almost 3% today. Meta is down 4.67%. Now, I'm going to do a quick technical analysis here for the S&P 500. But what you see here, I like to look at the funds flow, right? This histogram shows how big institutions are actually, trading. What this means, because they have billions of shares, and what happens is that usually they can move the market. So when you see the red here, it means there's been a sell-off, right? Net, right? So here, and it usually corresponds to the market going up. But the first thing is technically in terms of the price movement, to just show you. So this is year to date, right? So let's say if you look at, just let me take here year to date, right? And then just adjust this chart so that I can, let me just adjust this chart. Okay, good. Let me just use this anyways. I will just take it from the peak. And what you see here is that if I take this from the peak of this, right, technically this will show me that this is the price change. You can see that from the top there, right, to this point, the S&P 500 dropped, the index, it dropped from 6,143, roughly, let's just say 6,143. And then it is currently at 6,000, at this level, 5,521.52. But the most important thing is it has dropped by 10% from the top, right? And this is all mostly in this month of February. And you can see technically that this is where the sell-off is happening. And I'll tell you my theory, what I think. Now, The first thing that I will say is that President Trump's tariffs have been the ones that have been causing this market to really be volatile. Because each time that he's talking about the tariffs, basically tariffs generally, you are adding a tax, right? An import tax. If you are importing, right, then that thing is going to be 25% more expensive if they levy 25%. Now, what this causes is that the prices are going to go up, right? And that might, in the long term or short term, actually reduce the profit margins, because this adds to the cost. And even if the US wants to protect the domestic industries, it's going to take time for them to build factories for industries, like for the motor vehicle, maybe 4 years and stuff. But the stock market is forward looking. So what it does, it prices in that. So what it does, it is retraced back, and the inflation numbers released today have been very good. The job numbers, they are good. Inflation is retreating after kind of like showing a spike. I think it went up to 0.3% in the previous reading, and now it was 0.2% today. And what this means is this is good news, because there was a lot of talk about the egg prices rising. And what this means is this is good news. But the strategy which President Trump's administration is using, they want to lower the treasury bills, the treasury yield. And what this means is that the cost of borrowing is going to be lower. And in the process, what am I saying in simple terms? People are going to borrow cheaply. And if this works out, and the the department that is led by Elon Musk, is going to cut, if they're able to cut the current government expenditure, now that's gonna possibly yield some positive results in the future. So how am I positioning my portfolio? Fortunately for me, I was actually in the profit for most of my positions. So what I did is I had gotten out of the market, I think almost 60% of my portfolio. So I got out when it was relatively high. And what I was doing is I was then taking some of the profits and trading. And fortunately, that kind of like build the my profit, increased a bit of my profit. But now, because this is a very volatile market, I am mostly trading and investing for the long term. Now, certain things have changed. Number one, this tariff talk, it seems like it's not going to go away. We have 2nd of April is going to be another round of reciprocal tariffs, and this talk creates uncertainty, right? And when things like that happen, a lot of wonderful companies are going to drop. If I look, I take, for example, if I look at Amazon as an example, this is not investment advice. Let me take Amazon, for example. It's a wonderful company in my view, right? Okay, let me just take Amazon, for example. For the same period, if I take look at how it dropped from the top of about $242 to right now, it's about, at this point, you see that it's 21% down, which is a bear market if the market drops by 20%. So that's a 20%, assuming it was fairly validated. This, it means now it is discounted. But when I'm investing, I look beyond just one metric to say, oh, it has dropped. I have to understand the valuation, which is something that I do. For people who want to learn more about this, feel free to reach out to me on streetwiseeconomics.com, www.streetwiseeconomics. But what is also interesting is that there's been a net sell-off. Tesla has also dropped. If you look at from the previous high, right here, it was at this point $487. Right now, it's trading at around this point, but it went as far as at this point, which means that Tesla dropped by 55% since around December 16th. And it basically raised all the post-Trump election win gains. And what this means is that if someone got in at this top, they are actually under the water. Now, my strategy is that, at least for me, if I am investing for the long term, I have to understand the fundamentals. So right now I have a bit of cash, and I've been for some time doing research And right now at this point, technically, the S&P 500 is at a point that is very interesting. So let me say what this means. In my view, there are some possibilities here, right? So when I look at this, right now it closed at this level, and you can see that most of these big institutions, they are actually on the edge, right? They are selling, they are on the sideline. So if they start buying, they are going to beat the price up. Now, this is a very wonderful opportunity when I see this, but what I don't know is this going to the S&P 500, is it going to continue dropping? But if it is going to drop, I see a demand zone at this point. So what I think, and this is a possibility, nobody can really predict the market is, most likely the S&P 500 is going, it might drop here because there is no demand zone, at least from what I see here, right? So what it means is technically it might drop further, right? That means a lot of people who are holding this position are going to be bent. But if you are holding for the long term, in my view, by the way, I liquidated most of my position, fortunately at the top, and then a bit of it a couple of days ago. And I have some other strategies that I'm going to be employing because I have to be very strategic about how I manage my portfolio. Now, if it, let's say if it pulls back, there is another demand zone here, but there was a supply zone here. If you look at this point here, there's also another demand zone at this point. A demand zone, usually sellers, buyers, they come in and they bid the prices up, right? So in this case, if sellers are in control, if they continue to push the price down, it might come back here. But if they push this price up, it might come at this point. Let's say, let me look at the supply zone. If I look at the supply zone here, you will see that here there is a supply zone at this level. So this is a resistance level. So it might still, again, nobody can really predict the direction of the market, mostly in the short term. But these are some potential resistance level because what happens is institutions, they usually like to, it goes up, it goes down. But what I do is if I am going to be going in for the long term, I'm not going to panic over the short term, right? I'm just going to average down what we call dollar cost average. But that's a different strategy when it comes to individual companies. I like to get in when they are really hugely discounted. So that's the strategy. Now, I'm going to be doing some videos in the future about some strategies that I'm using. Right now, I'm trading and also doing covered call strategies, and that's the other strategy that I'm using. Basically, in this case, I would hold 100 shares of that position. For example, let's say NVIDIA 100 shares. And what that means is that I would open the position by selling that contract, which is equivalent of 100 shares. And let's say for a strike price that is higher, let's say it's at 115, I would say, let's say if I choose 130 and I get the premium, let's say $300, let's say for 2 weeks. What it means is if NVIDIA reaches the 2 weeks expire and the price is below 130, I get to keep the premium, $300, right? And the shares, right? So let's say it's at 120, right? What it means is I get to hold the shares, but I get paid that money. Now, if it drops, what I can also do is I can roll it forward, right? Let's say now it's at 120. So what I would do is I would buy back that one contract at the same strike price and expiry date, right? And by that time, the decay would have kicked in, right? Let's say maybe a day before the 2 week period. So what that means is I would then get the premium, right? And then open another position by selling another covered call, selling an option contract for, let's say, the next 2 weeks. Now, let's say it's at 120. Now, let's say I'm going to put it at 135, right? So what you see here is that I would get the premium. So that premium in this case is a bearish market. So as long as it doesn't get up to that level. Now, let's say another scenario. NVIDIA then closes that 2-week period. Now, let's say it's 140. What it means is that I would lose my shares. They would be called away. Let's say my strike price was 130 and I got in at 115. So what that means is I would still make that profit 115 to 130. That's 1,500 if I had 100 shares. And then plus that premium. So that's $1,800. So in that case, I would still, it would be a good trade. I would have made some money. I would not have lost my money, right? But I would have given up the potential upside now if I had just held the shares, and now it's 140. So in that case, it would mean that if I just bought them at 115 and it's now 140, I would make a slightly higher profit. But given that it's a very volatile market, and NVIDIA as an example, if I look at the 1 month trends, it's bearish. It's most likely going to be going down. So I would be collecting premium and just repeating that. So that's the way that I'm thinking of trading, because it protects me from the upside. In any case, I would make money, right? If it goes up, I would make money still, if assuming that my buy price was lower than the strike price. And then if it drops, still that would be fine if it goes up. So that's another strategy that I'm doing. But today I was trading Palantir, just using my technical analysis and trading. Now, the last thing that I will say, very, very important to look at the macroeconomic picture and keep an eye on what's really going on, because with President Trump, things change very rapidly. And also even the geopolitical tension now, right now, the euro in Europe, the markets, they seem to be doing well because there's a lot of uncertainty in the capital markets in the US and also in Canada, because that's where I live. And because of this trade war that's happening between Mexico, Canada, there's a lot of uncertainty. But in the midst of that, there are wonderful companies that I've been looking at, and I'm considering that. So tomorrow, I'm going to see what's going to happen. But as usual, stay tuned and keep an eye on this, trade and invest wisely. And remember, whatever I'm sharing here is for educational and entertainment purposes. And therefore, please do not take this as investment advice. If you haven't subscribed, please feel free to do that so that we can learn more. Let me know how you are trading. Let me know your thoughts on this. But the good thing is, if you have some cash, if you have a long-term perspective, for me, I'm seeing some opportunities, even though right now I'm waiting for a few other things. For example, just to make sure that my capital, because when you have money in my brokerage account, usually they charge 1.5%. So if you convert, let's say if it was in Canadian dollars, I use the Nobit Gambit, that's another process. I journal it so that at least I can avoid that 1.5%, and maybe instead of maybe paying 1.5, I'll pay a very small. So I'm waiting for my money some of my money to clear to the US dollars, and then I'm gonna be playing my trades and also buying some other positions. So I'm gonna see how this will unfold. But until next time, take care, trade and invest wisely, and bye-bye for now.